Hello, good morning and welcome to this brand new edition of the newspaper show right here on ET. Now, I'm Cheryl D'Souza and I'll take you through all the top stories that's there on the Economic Times as well as the Times of India. So let's get going with the top 10 headlines that's there on the Economic Times this morning for you. And first up, it is our government is fearing mini lockdown may actually hurt the recovery in the economy, and that is the top headline that's coming in from Economic Times for you this morning. Moving on. You have flight bubbles for foreign travel. Reliance and Future Retail finalizing share swap deal. TATA Sons board is to meet today again. The Department of Telecom withdraws demand notices on GAIL as well as Oil India. The fuel demand dips in July as revival lags. Unions are saying that Air India proposes 60% pay cut for the pilots. And looking to neutralize some taxes is the word coming in from Piyush Goyal. India and United States talk possible FTA before November. And Bill Gates says that India can make vaccines for the world. And those are the top headlines coming for you this morning from the Economic Times. Let's move on to what are the top market headlines that's there in the newspaper. And first up, Jio may bag 44% revenue share by 2024. That's the word coming in from the analysts. Moving on to Infosys, a surge about 10% in yesterday's trading session. Investors see it as a safe bet. DMART shares slip below the key 200 DMA support. NBFCs seek special fund for small and mid-sized peers. And Mindspace REIT IPO to raise 4,700 crore rupees. And right from market on to corporate headlines then. IndiGo and SpiceJet to fly to UK as well as Europe. You have India Bulls Housing seeks to sell 10,000 crore rupees worth a builder loan. iPhone maker Pegatrons registers India subsidiary. FMCG sees life at pyramid's bottom. And lastly, High Court upholds single bench ruling in HUL and Imami Row. All right, those are the top headlines that's there on the Economic Times for you this morning, right from the corporate headlines to market headlines. But let's talk something about macros. And this is the top story that's there on the Economic Times, and that is the center is worried over macro impact of mini lockdown. Remember, the states one by one are going into shorter time frame of lockdown in order to curb COVID-19 cases rise. But to talk more on this, what is the center worried about? I'm joined by my colleague Poonam. Good morning, Poonam. A very important story coming in Economic Times that the center is indeed worried about the impact that these lockdowns could have actually on the economy.
That's right. Good morning, Cheryl. In fact, if you look at the news bit, what the article states that extensive shutdowns being imposed with little warning by the states have worried policymakers at the central level as they could threaten the economy, which has already been impacted on account of the COVID pandemic. They're also stating that the issue is being discussed by top government officials as the most recent economic indicators, although have been recovering. We need to watch out for if the momentum of the recovery is going to continue or not. In fact, if we look at what recent estimates from ICRA suggest, they do suggest that they are likely to see the GDP growth for FY21 far lower, nearly around 9% versus a 5% contraction. So now ICRA is estimating a sharper contraction in the recovery for FY21, and that needs to be watched out for. And that is exactly what the center is worried about. While the economy has definitely been opened, certain states, for example, very recently Uttar Pradesh announced a mandatory lockdown over the weekend. Maharashtra also continues to be largely closed. We have also seen some amount of concerns in large metros such as Bangalore, Patna, Pune. All these large metros are also shut down. So nearly a good amount of states and good amount of cities which do contribute significantly to the GDP. If those continue to be under lockdown, the economic recovery could come under pressure, and that is what is worrying the center. So we need to be watchful of that, and we need to also look out for if there would be guidelines coming in from the center level for the states in terms of imposing lockdowns.
All right, Poonam, thank you for taking us through that important story that's there in the Economic Times, that the government is indeed worried about these mini lockdowns and the impact of that it could have on the economy revival. Remember, you're slowly seeing sales pick up, but definitely it was a little dampened in the month of July. But let's shift focus now on to another story that's there on the page 4 of Economic Times, and that is TATA Sons board is all set to meet today. What are they going to discuss about? What's on the agenda? I'm joined by my colleague Pankaj to take us through the story that's there in the Economic Times. Good morning, Pankaj. TATA Sons board is all set to meet today, and this time what's on the agenda?
So again, it's an interesting board meet happening, once over a month now. Usually they have 6 to 8 board meets through the year, but this time around, within a month, they have called for another board meet, which is scheduled today. Remember, TATA Sons, of course, is the parent of all the Tata companies, by far one of the largest conglomerate here in India. Now, when we talk about what's on the agenda, last time around also they discussed fundraising, but this was largely on the discussion side. So what we are picking up now is that some of the companies may need some emergency funding. Of course, COVID has dried up the cash flow, so maybe that is something which they are looking at. And secondly, also what's happening with JLR, that is something which will be important. So we've had, the CEO of JLR, Mr. Ralph, who have actually gone ahead and given his resignation. From September, he continues to be a board member at TATA Sons, but what's the latest on that? Any appointment of the new CEO, extension of Ralph, is something which the street would eye out for. Apart from that, approvals for fundraising into businesses that need liquidity, how that happens, TCS has declared its numbers. TCS, of course, is the spearhead in terms of cash flow, so any strategy on that front is something to watch out for.
All right, Pankaj, thank you for taking us through that story. Let's shift focus now on to the ET markets page, and the story there is about Reliance Jio. And this is what I'm going to talk about and what the analysts are actually saying. They're saying that Jio is likely to back 41% of mobile subscribers, 44% revenue share by March 2024. So that is the word coming in from the analysts. They're saying entry-level smartphone plan is likely to deal a big blow, or rather a blow to rivals. Vodafone Idea may be worst hit. What else are the analysts saying? They're saying that Jio's EBITDA margin is estimated to rise to 45% by FY21 and 52% by FY24. They're also saying that the entry-level smartphone plan to target around 350 million feature phone market, users market, and gain market share from the incumbent. Remember, you had Vodafone Idea shares that fell about 9% in yesterday's trading session. You had Airtel that was flat with the negative bias as well. So there you go. Jio is likely to acquire 41% in country's mobile phone subscribers and 44% revenue market share by March 2024. That is the word coming in from the analysts. Now let's shift focus on to page 7 of Economic Times, and there you have a story about India and US and them talking about a possible FTA. So I'll directly read the news of the newspaper for you. And there you go. It says that the timing is very crucial about this particular possible free trade agreement that India and United States are talking about. US is keen on a deal ahead of its presidential election that is all set in the month of November. Negotiations are on. The initial limited trade package to conclude soon. Top business leaders have pitched for an FTA, that's free trade agreement. US is keen on a deal before their elections in the month of November. You have India has raised totalization child labor sectors with United States. So what could the initial deal include? It could include restoration of GSP benefits to India, market access for both nations' agri product. And both the sides have been actually trying to thrash out a trade package as well with limited scope, with the long-term aim of an FTA since last year amid other unresolved trade agreements. So that is the latest that we are actually getting in on that particular front. India and United States is all set to sign a free trade agreement before November. That is when the elections in the United States will be held. Let me now shift focus to another story that's there on page 1 of Economic Times, and that is about the aviation minister. He held a press conference yesterday, and in that India has now allowed limited international flights to select countries nearly 4 months after shutting down all travel in the wake of COVID-19 restrictions. India is going to create flight bubbles for foreign travel. Limited service to United States, Germany, UAE, France are under the policy. Flights are not allowed via hubs, passenger to fly directly. This is what is actually the gist of that particular story. So, international flights to select the destination, India is creating flight bubbles for foreign travel. But remember, the international flights are still not operational, but this is India has created flight bubbles, has agreements with certain nations, and that's how the flights are conducted. Let me shift focus now onto a story that's there on the page 3 of Economic Times, and this is about Reliance Industries and Future Retail. They are set to near a deal and near the final share swap agreement. But what is this all about, and how much stake is Reliance looking at in Future Group, and what are the contours? I'm joined by my colleague Vinny to get us details of this Economic Times story. Good morning, Vinny. And what's it looking like for Reliance and Future Retail deal now?
So, Cheryl, they are on the finalising stage almost for the Reliance and Future Retail deal. And now they are nearing the stage where they are deciding on the swap ratio. Now, Reliance is very keen on an all-stock deal swap ratio. And, that means they'll not be giving any cash. So, we are looking at a complete equity stock deal swap ratio is what the report is suggesting. So, according to this, now Reliance will be directly paying all the future lenders, but not pay any cash to the shareholders is what this means. So they'll directly be paying to the lenders. And, a couple of days back, or maybe last week, we also saw that, Reliance was asking the lenders to take a 30% cut from the payment haircut. So that is also something that, shows that they are looking to pay the lenders directly and not paying the shareholders any cash as of now is what this deal is suggesting. Now, we already know that around 75% of future group's promoter shareholding is already pledged. So, that is a very big deal, and to pay a lot of the Reliance will have to pay a lot of money to the lenders, which is around 12,900 crores is the debt of the company. So that is why they are planning on an all-stock deal, which will be made as a swap ratio with Future Retail, while they'll be paying the lenders in cash directly is what the deal suggests as of now.
Oh, God. Vinny, thank you for taking us through that story. Reliance as well as Future Retail. Let's see how they react to trade, but definitely it is still in the finalization stage, and this is all as per sources. Let's shift focus now onto a story that's there on the page 6 of Economic Times, and this is the story that my colleague Varun will shortly join in to talk about, and this is about NBFCs. They seek special fund for small and mid-sized peers. How much, what else are they proposing? Varun is here. Varun, take us through the story. NBFCs, looks like they've written to Finance Minister on this.
Yeah, Cheryl, good morning. So, to make it clear, if you're HDFC Limited, you have no issue raising money. If you're Bajaj Finance, you have no issue raising money. However, if you're a smaller mid-sized NBFC, of which there are many, and a lot more smaller mid-sized NBFCs than large ones, no one's going to give you money right now because your credit rating is absolutely destroyed. So the government has already done things to help this out. There was TLTRO, as we remember. There was also special refinancing done through NABARD and SIDBI. So all this was targeted at helping these firms out a little bit. Now what's happened is that capital's probably dried up, and they're seeking for additional relief. Now again, SIDBI and NABARD will probably be the two bodies that have to deal with something like this. And we believe that the smaller NBFCs have written a 3-page letter to Nirmala Sitharaman's office asking for some kind of special vehicle to be set up, an SPV or a vehicle by which smaller NBFCs can avail funding. So it'll be interesting to see whether they actually are able to get more money in the current economic environment. They aren't AAA rated agencies like their larger peers, so that is the main point of contention, which makes people skeptical about giving them money. At the same time, if you don't supply these guys with the funds they need to grow and to manage the stress in their balance sheet, you're risking a whole bunch of default as well. So we've already seen what's happened to the NBFC market since IL&FS happened a couple of years ago. This would be like a bunch of smaller firms going the IL&FS way. So that's something we really don't want. And let's see what the finance ministry says to this request by these smaller NBFCs.
All right, Varun, thank you for taking us through that story. Let's shift focus now and let's talk about the story that's there on the page 1 of Economic Times. And there you go. The second largest contract manufacturer for Apple, iPhone maker Pegatron registers India's subsidiary. The move signals Apple's push to diversify supply chain out of China. The $45 billion Taiwanese contract manufacturer is one of the 3 global makers for iPhone. The 2 others are Wistron and Foxconn and are already present in the country. So Pegatron will take at least 6 months to roll out products in India. So Pegatron, Apple's second largest contract manufacturer, has registered a subsidiary in India, setting the stage for expanding the manufacturing capacity of iPhones in the nation. On back of heightened US and China tensions, Pegatron has registered its Indian subsidiary in Chennai. This is as per sources to Economic Times. Currently, the company officials are in discussion with multiple state governments to find land to set up a factory, after which they would import plant and machineries. Pegatron could not be reached for a comment, nor did Apple respond to Economic Times' emailed query. But this is the story that Economic Times is picking up and that is iPhone maker Pegatron registers their Indian subsidiary. Now let me shift focus to another story, and it is related to aviation space, and it is IndiGo and SpiceJet to fly to UK as well as Europe. As India opens air bubbles with various nations, IndiGo and SpiceJet in a first are wet leasing long-haul planes to launch flights to UK and Europe. That is as per Economic Times report that is coming in for us. Because of this particular air bubbles, you have actually SpiceJet and IndiGo all set to fly to UK as well as Europe. Let me shift focus now on another story that's there on the page 1 of Economic Times, and this is related to India Bulls Housing, and here you go. This is the story that I'm going to talk about, and that is India Bulls Housing Finance seeks to sell 10,000 crore worth of builder loans. The talk is on with Deutsche Bank, Oaktree Capital, Brookfield and SSG Capital. So India Bulls Finance is in talks with at least 4 potential investors, Deutsche Bank, Oaktree Capital, Brookfield and SSG, to sell builder loans worth 10,000 crore rupees as the company seeks to boost its liquidity position. This is as per sources to Economic Times. India Bulls is planning such sales in a few tranches over the next few months. And this is the negotiations with Oaktree and Deutsche Bank appears to be in advanced stages. So this is all as per sources to Economic Times, that India Bulls Housing Finance seeks to sell 10,000 crore rupees worth of builder loans. So let's watch out how the stock trades today in the session. Now let me shift focus to what are the top 5 headlines that's coming on in the Times of India for you this morning. And first up is India COVID-19 cases. The surges past 1 million cases. The government says the actual case load is 3.3 lakhs. Spent heavily on infra, advisors are telling the Prime Minister. Maharashtra logs best HSC results since 2015, and Mumbai's third highest July day rain since 2015. All right, those are the top headlines coming in from Times of India for you this morning. But today, let's shift focus to earnings. And HCL Tech is all set to report its Q1 earnings today. What is the street expecting? What's ET Now poll? My colleague Poonam is here to take us through HCL Tech's preview.
Yeah, hi, sure. In fact, good morning. Well, we should be watching out for HCL Tech results. It's plotted early in the morning. Dollar revenue is seen to degrow considerably on account of the hit due to the COVID pandemic. In constant currency revenue, that's going to degrow by nearly around 6.8% quarter-on-quarter. Dollar revenue is seen to degrow 7% QOQ to $23.66 million. EBIT margin will come under significant pressure, down nearly around 160 bips quarter-on-quarter to 19.3% on account of lower revenues, lower utilization, but some amount would be offset on account of the benefits of INR depreciation and lower travel and variable pay. Profit is seen at 2681 crore, down 15%. Cross-currency headwind is seen at nearly around 20 bips. Revenue would be declining due to the weakness in IT services, engineering, R&D, and the product business. Products as well as the platform business, however, is expected to be slightly stable. Company has high or the single-digit exposure to stress verticals like energy, travel, hospitality, and high-end retail. Watch out for the impact of COVID on these verticals. Also, watch out for the impact on the financial services vertical, manufacturing as well. Commentary on demand in the infrastructure management service and IPM products would be most important. And most importantly, company did not, would the company be giving guidance going ahead? That needs to be watched out for. Pricing pressure has been evident for HCL Tech. Commentary here as well as the deal pipeline, because HCL has higher reliance on large deals for growth. And of course, capital allocation policy and view on acquisition strategy. All in all, it's likely to be a weak quarter for them, but the stock has already hit, I guess, record highs. It's already up nearly around 11% in the month of July itself. So watch out for the commentary. That would be most important, Cheryl.
All right, Poonam, thank you for taking us to what to expect from HCL Tech. Like Poonam said, they are all set to report their earnings today and maybe in the morning itself. All right, on that note, we are out of time in this edition of the newspaper show. Thank you for watching.